The stock market is down 10% year to date here in 2025. Is now a good time to retire? Got a question from a viewer here. I'm going to read the question right now and we'll get right into this. The S&P 500 is down 10% and I was planning on retiring January 1st, 2026. Our investments are down, but only about 7%. Is this a bad time to retire? I'm also worried about Social Security being there for us. I'm thinking about working at least one more year. My wife and I are 65 years old. Help. Okay, I got this question yesterday. A couple of thoughts come to mind. Number one, a Mike Tyson quote. Everybody's got a plan until they get punched in the mouth. Mike Tyson was a boxer. Most of you know that quote. But just so appropriate in these times. Second thought is a 10% correction is so common it has a name. It's called a correction. It happens on average every 1 to 2 years. Some data. Since World War II, the average correction is every 19 months. This is correction or above, so 10% drop or above. So it includes bear markets too. Every 19 months after World War II. Since 1980, and this is only until 2023, was the data that I found, there were 27 10% or more corrections averaging 1.6 years between them. So aligns really with World War II timing. They're uncomfortable, but they're a feature of the market. This happens. Okay, now let's dig one layer deeper. I've gotten dozens of comments also on, hey, this time feels different. One man caused this drop. Okay, so I just pulled up a few recent examples of man-made, not one man, but man-made. I'm sure you could find some one-man stuff, but let's look at the dot-com crash, 2000 to 2002. What happened? Irrational exuberance drove tech stocks to insane valuations with no profits. There were no profits in these companies, and it just kept going up and up and up. The bubble burst as investors realized they weren't sustainable companies. The man-made factor is speculation, hype, and overvaluation. The S&P fell 49% during that. That was all hype. Not one person, though. The global financial crisis from 2007 to 2009, what happened? Reckless mortgage lending, complex financial products, and over-leveraged banks caused the drop in the housing market. I remember seeing ads on television where you can get 105% of the value of your house in a loan. 105. So if you had a $100,000 house you were buying and signed all the paperwork, they gave you a check for $5,000. And you didn't even have to have a job. It was crazy because a lot of bonuses were out there for people doing these loans, and to get a little complex, they packaged these bad mortgages together. They didn't sell one bad mortgage. They bundled them together, let's say in groups of 100, and they as an entity, those 100 mortgages, they said they had a AAA rating. Well, finally that dropped. Well, that was all man-made. Poor regulation and flawed risk models were the trigger there. Number 3, Black Monday. October 19th, 1987. What happened? The Dow dropped 22.6% in one day, the largest one-day drop in history. It was triggered by programmed trading and panic selling. So new automated trading systems caused a cascading market selling. So all this computer trading, just automatic triggers people put in. Man-made. The debt ceiling crisis. Congress in 2011, this stuff has happened before, debt ceiling. Congress threatened not to raise the U.S. debt ceiling, risking default. It's a political standoff. all people. You can name one person. U.S. political gridlock, S&P dropped 17% in 3 weeks. So there's another example of a political drop. Number 5, the tech sell-off, rate hike reaction in 2022. What happened? The Fed raised interest rates aggressively to fight inflation, trigger inflation fears and Fed policy, man-made factor. Ultra low interest rates have inflated tech stocks. The reversal crushed them. The NASDAQ fell by 30%. The interest rates from like 2010 to 2022 were insanely low, like 0 to 1%, and everybody got used to that. The only place to put your money was in stocks. You put your money in stocks, create a bubble, falls 30%. Purely man-made. The 6th one, and last, the crypto crash of 2022, driven by speculation, fraud, FTX, we all know that, and overhyped projects. Entirely man-made, but this was in the digital asset world. So, yeah, that FTX, just that one event was not, that one person and one event was not the entire cause, but it was maybe the straw that broke the camel's back. These 6 examples show that while outside forces can contribute, you can have hurricanes and tornadoes and earthquakes and things like that, but often the causes are man-made. So I'm not convinced this time is different. So I got a couple more things to talk about bluntly about this person's plan, but first of all, my name is Joe, if we have not met. I'm 60 years old. I retired 6 years ago, and I'm just sharing my journey, my decisions, things I did wrong, what mistakes I had in my plan, what I got right, how I'm doing financially, where my money's located, how it's invested. I share it all to help you take some of the fear out of retirement. And that's what this question is about. It's about fear. Can I retire now? The market's corrected 10%. Okay, back to, hey, one more thing. Hit like and subscribe. If this is the second video of mine you've watched, hit like and subscribe. If it's the first, okay, try me out. But like and subscribe, this is really, likes and subscribes have really dropped off in the last 3 months, and I don't mention it enough, I always forget. Okay, so back to the question, can I retire? The market's down 10%. If your plan can't handle a 10% market correction, I have serious questions about the strength of your plan. Number 1, are you diversified? Diversified into not only stocks, but do you have bonds? Do you have international stocks in there? Not individual stocks, but are you diversified? Maybe into gold, maybe into real estate, but do you have everything in the S&P 500? That's not diversified. It's diversified for your equities, but not over all different asset types. Second thing, do you have a bear market plan? I mean, if the correction, a bear market is over 20%, 2 quarters in a row of dropped, a recession is two quarters in a row of dropped GDP. A bear market is 20%. So if this 10% knocks you, off balance, what do you have a bear market plan? I use buckets. I have bucket 1 money. I made a lot of videos on this where I have 10 years of needed income from my investments. I have out of equities. I have them in money market funds, tips, bonds, high yield savings account. But that I've got a lot of videos on this, but my plan is to have a bucket 1 of money to handle a 10% correction. That's not even a blip for me with a good plan. Okay, and I think I got a good plan. I don't know that. But I'll talk about how to strengthen your plan in a little bit. Do you have a balanced portfolio? Maybe you just want to go 60-40 and you rebalance, every 6 months, every year. That can be a plan for handling bear markets. 100% equities If you're, drawing out 4 or 5% a year, and that's your plan, that's not really having a bear market plan unless you got an enormous amount of money. Okay. Number 3, do you know market history? I just made a video yesterday, and I'll link it, talking about bear markets, how long they lasted since 1950. And it's a feature of the market. So don't be surprised, and hope is not a plan, okay? Hope that the next 30 years there's no corrections or bear markets is not a good plan. I don't think that ever would work out based on history. Number 4, I'm really suspecting, because I've seen this a bunch, that confidence is the issue. Fear seeps in as your target date draws near. Okay, confidence is the issue. I did retirement coaching for 300 clients. I stopped doing this. It was overwhelming. It was fun, but overwhelming and intrusive to my retirement lifestyle. I had a couple calls a day, and it just was overwhelming to me. But I learned a lot from talking to those 300 people and listening to people express their concerns. Even though they had a great plan, they just needed to run their plan by somebody. It is completely normal to have fear and a confidence problem with your retirement plan that you created. That's completely normal. I haven't met the person that doesn't have that. I've talked to people with $500,000. I've talked to people with $5 million. Everybody has it. Everybody has fear and confidence. Here's the problem. I've seen it over and over and over again. You're a proud DIYer. You've saved money on your own. You've invested it on your own. You've done great. Your income has grown. Your skills have grown. Your savings has grown. You're doing everything right on the savings side of the equation. Great job building assets. But retirement's different. And a lot of people don't realize it's different till they have a market correction like this or the day after they retire. It is different. It's a different skill set. It's as different as baseball is from hockey. Completely different skill set that you need to learn. And there's a lot to learn, okay? And I still believe you can do this on your own, but it takes a lot of work. There is, a couple hours a week I spend trying to learn different things about how stocks act and how bonds act. Now, I'm not watching CNBC and MSNBC and CNN or Fox to get my information, okay? They're just trying to create drama in your life. But there is some finality to making the retirement decision. It's like you can't, once you go through that door, you can't go back. As we age, our options become less and less. You can't go back to work as you get to be 70 and 75. Fear of running out of money is a big issue. Making a mistake, having a misunderstanding in your plan, having a cell error, a formulation error inside of your man-made spreadsheet. I see it all the time. I get examples. People send comments that, oh my gosh, I forgot to take out taxes in this whole column. The solution I found, and has worked for dozens and dozens and dozens of people, I want to say hundreds, thousands, maybe over 2,000 really. You must run your plan by somebody else. There's no alternatives to this, to getting confidence in your plan. You get inside your own head with your own plan, and you got these fears, and you got these doubts, this is all on me. It's a solo game. Doesn't have to be. I chose to get a couple close friends to form a retirement group. We run every decision by each other, okay? I don't make any decision without talking to them. They know my expenses, know where I'm invested, know my plan, okay? But I understand these are hard to find. So I found a couple solutions for you. The folks at Money Pickle, you click on the link, it's like the third link below, you get a free 45 minutes to talk to a certified financial planner. Ask them about inflation. Ask about Social Security. Ask them if this is a good time to retire. Ask them what they would do different from your plan that you verbally talk about during that 45 minutes. Free call. If you think you've got a good plan, What harm is it going to do? And I challenge you to run your plan by somebody. I promise you, you're going to learn something for free. The second option I have is to contact Donaldson Capital Management or Defining Wealth. They have links below. I found these people for you. I've had 10 companies that I met with to provide a $300 plan review. I dictated the price. I want a $300 plan review where you, the viewer, submit your information, whatever format it's in. It can be a Boldin PDF report. It can be an Excel document. It can be a Word document. You submit it to them. They're going to spend 40 or so minutes looking at that plan, crafting the strengths and weaknesses, what they would do differently, and then they're going to schedule a phone call with you to go through that. Here's where your strengths are. Here's where your weaknesses are. Here's what I would do different. I mean, that's a bargain for $300, and it's just a bargain, okay? Now, both of these companies are affiliates of mine. I do get compensated by them. They are paying me for really finding them and helping them create this product. They didn't have this product before I talked to them, and I've been told no 8 times by other companies. This is not something the industry wants to do, but I found 2 companies that are excited about it and thrilled. Get on their calendar. So the last option is, hey, if you want a comprehensive plan created to compare to yours, which I think is a great option. Neil Fort Window is the guy that created my plan. When I retired 6 years ago, I've known him for 7 years. He created my plan. He's also going to give you 12 months of engagement. So he'll create a plan for you, create 12 months of engagement. So early on, when you have those questions, you have those doubts, he's there. He's a phone call away. He's a Zoom call away from saying, hey, this is what historically has happened. This is what other people are doing. This is what my recommendations are. He gets you off on the right foot. Now, this is a little pricier because he's investing 10, 12, 15 hours into every client. Contact Neil. There's a phone number, okay? Information and plan challenges. Challenging to your plan, not by you on a different day. You can't challenge your plan on Tuesday that you created on Monday. That's no good. Those challenges clear the fog of the future. Clear the fog of the future. There you go. That's my take. Can you retire this year? I can't answer that question. But if you have doubts, you have confidence issues with your plan, I gave you solutions on how most people solve that. This is Joe out.